All right, so in this euro Australian dollar, all right, I'm on a daily chart, so I don't know exactly when you were trying to trade this since it's the daily. So um, clearly, this is a downtrend that was forming. So typically, I don't know. Let's see if we came back into the market and I saw this. All right. So what I'd be looking for is some retracement, some pullbacks. So I use my Fibonacci retracement tool, and essentially, I want to see price come back down into this 61% retracement level. So I look for price to get back here. So I actually be looking for shorting opportunities based off of that. So essentially, this is what my chart would look like. Put it down. I could throw a little bit. All right, so we're above um, the 200, the 50, and the 20 moving average. So we're bullish in that regard. However, if I use my Bollinger Bands, we're outside of the Bollinger Bands. And that is a clear sign once you're outside of Bollinger Bands. Price does not like to survive long outside of the bands. So we are looking for price to come back down into this area. All right. So once again, it's on a daily chart. So I wouldn't be looking to take trades based off the daily. I would go down to a lower time frame. So in this case, I go down to the hour. All right, and this is what I see down here, the hour. All right, based off of this, resistance right here, and we got support right there. So what I'll be looking for is price to break below the support. There's two ways I could take it. I could take the trade immediately, or I could wait for a retest of the zone and then go short on it. If price breaks above here, I possibly could look for a retest to go long. All right, now if I go short, my stop loss goes above the candle that got eliminated. So let's see how this works. All right, so we broke. All right, so where's my stop loss? My stop loss is above this red candle. Why? Because we engulfed it, we eliminated. All right, we broke this level of support. So I'm right here. So I'm just gonna put an SL right there. Good. So let's go into the trade. All right, we're already in trade. Stop loss hit. Stop loss is set. All right. So where do we want to take this back up? So we want to come back into market structure area. So really, this is probably where I want my first target would be. However, remember I said I want to come back down to this box zone down here because this is the golden ratio. So we use a Fibonacci retracement tool. So I'm just going ahead and play this. So we good. We deep in the profit. We entered into the trade. We're good. And we're waiting for our target to be hit. Stay patient. And bam, target hit right there. On the money. We're good to go. We're out of the trade. We're done. All right. So on a 1 hour, like I told you, I could have went out a 30 minute, but on a 1 hour, I saw enough. It was good enough for that. So how many pips that was that? Probably from where we were at. We got up here somewhere, all the way down. About 595 pips. That ain't bad. Um, all right. So what we got going on right now? So essentially, you got a double bottom down here on the 2 hour. So this is going up. We look like this is going to be bullish. So this right here. So look, all it is an inverted. So you see this pattern. We call it the Bart Simpson pattern. So if you've never seen that before, I'll show you what the Bart Simpson pattern look like. Bart Simpson um, pattern. All right, you see that right there? So this is the Bart Simpson pattern look like. This is iconic hairline and whatnot. Um, it's funny. I mean, it's not really truly a pattern they call it trading, but it's like it's an inside joke of a pattern, but it is legit. Uh, but yeah, so you see the iconic hairline right here, and then you see the breakdown. But you got an inverted one. So this is an inverted Bart Simpson pattern. You see it accumulating. All right. So we're looking for some upside action based off of this. And you also got some potential flag patterns, bull flags that are forming uh, right here. So we got typical double bottom flag pattern. All right. That's coming into play. So this is an area where we want to look, see if we get some strong move to the upside. Of course, you got to clear that area um, before you really can be home free. But I mean, that's 47 pips to that point, so that is a good area to look at too as well. What do we got? What do we got? Yeah. So yeah. Now, how can I can get my targets up here? So we use something called Fibonacci retracement tool. I mean, extension tool. So I can measure extensions in the market, all right, and then I can get my upside target. So I'm looking for this pair to come up to there once we break through. So that'll be my first area of contact right there. Matter of fact, I need to get the third area. It's up there. I missed it. All right. So right here, it's third area. So that'll be the third area for a target. And look for entry. You take it up that way. This little drop down right here is just a retest of market structure. So this screams a lot of potential bullishness to the upside. But once again, yep, you stay um, set your stop losses and everything in place is to keep it moving. So um, sometimes if you're taking too many L's or whatever, you might be over trading. You might need to scale back on trading so much. Of course, use the right risk reward ratio. Should be able to lose 10 times in a row and still be profitable. So that's the type of ratio you should have. All right, hope that video helps. Have a great one.